What is up, my investing goblins? In this video, I'm going to be covering exactly what my strategy is moving forward in 2025, year to date in the last 3 months with the tariff war and market uncertainty. The stock market has been insane. I'm sure you know, or maybe you don't. If it's your first time getting into investing, I'm glad you made it here. Welcome to the channel. My name is Ruben, and I'll be sharing with you guys in this video exactly what I'm doing moving forward. So go ahead, keep watching. Let's get right into it. So first things first, I'm gonna be breaking down my portfolio and exactly what holdings and how much of those holdings do I have diversified in my portfolio. So from the largest holding down to the lowest, we have VU at number 1 at 18.35% of my portfolio. If you're not familiar with VU is just an ETF that tracks the S&P 500. I'm sure you've heard of S&P 500 before. I've done a video on it. I'll have it up here somewhere. Maybe it's up here. I don't know. But basically, the S&P 500, top 500 companies in the US by market cap. There's an 8.5% average return over the last 20 years. It's one of the most popular ETFs that people invest in, most popular indexes that people track. But right now in my portfolio, I am down 2% on my position in VU. So at number 2, I have Nvidia at 17.1% of my portfolio. Nvidia is a semiconductor manufacturer that specializes in GPUs, and plenty of other softwares and hardware components as well for gaming, for computers, for stuff of all that sort. But what I'm most excited for is their AI infrastructure. Whatever you see with whoever's leading in AI, they're using NVIDIA's chips. And I think as long as this boom of AI is just getting started, even though it might have fizzled out a little bit, I think the future of AI is still very bright and we're just scratching the surface. And the more and more we get into that, the more and more reliance there will be on NVIDIA's chips. So not only are they leading America in GPU production, but also the world. The AI development part of it shows huge upside. Right now, NVIDIA is trading at almost $118 per share, and I have a very aggressive price target of $170. I think NVIDIA has huge upside. It's at a huge discount right now. I think the future growth potential of NVIDIA is huge and something to keep your eye on, especially at how much of a discount it is at right now. As of right now, though, I am down 6.3%. In my NVIDIA holdings. You're gonna see a common theme here with my holdings, and that is, well, I'm down on almost all of them. I think all of them. I was up 10% to start the year, doing really well, and now my entire portfolio is down about 22% due to the tariff war, due to market uncertainty, due to the DeepSeek news that came out a couple months ago that shocked many semiconductor manufacturers like NVIDIA and Taiwan Semiconductors, and even other AI companies like Microsoft, Google, Amazon. It shocked them all, and it's just something where I'm looking at it, and was it a shock? Yes. Was it uncertainty? Yes. But did the business model change? Did the integrity of the company change? Did the value of the company change? Well, the monetary value, yes. But I think that the mental value of what is actually there, nothing's changed. There wasn't someone getting fired. There wasn't somebody who completely changed a business model. Everything's been the same, and it's just been news. News is what's been driving the market down, and honestly, I don't think that's a good reason to sell, and so that's why I've been buying more and dollar cost averaging my price on NVIDIA and other stocks down as we go. So for number 3, I have the QQQ at 11.14% of my portfolio. That is a tech-heavy ETF. You're gonna see a common theme here in my portfolio is that I am very tech-heavy. I think this is where the future's going. Job security, more innovation. America's innovative. There's other countries battling this out, and there's a war for AI, this war for innovation. And I think as long as there's competition, there's room for the US to step up and grow. So fantastic. I am down 4.6% on the QQQ. Number 4, we have socks. Not Nike socks, but the semiconductor iShares ETF that diversifies, I think, about 10 to 15 different semiconductor companies all into one ETF, which is just more GPU stuff for AI processing. So I am down 7.5% on that. So number 5, we have Microsoft, huge tech company. You've heard of Microsoft. They're not going anywhere. They are a tech giant. If you told me you know what? I would bet my life savings that Microsoft will still be here in 10 years. And if they're still here in 10 years, quarter over quarter earnings are going to be positive. Year over year earnings are going to be positive. There's just no way that you can convince me that companies like this big can just disappear off the face of the earth. They're going to continue innovating. They're going to continue buying companies. They're going to continue doing all the things that's going to be pushing America's tech forward. So Microsoft, 10.24% of my portfolio. It's a safe bet. Their investments into ChatGPT and their exclusive ability to use certain parts of ChatGPT, it's a no-brainer for me. My price target for Microsoft is $490. It's an aggressive price target. That's where I see the fair value at. I read a lot of Morningstar reports. And so if you hear my fair values and my price targets, a lot of these come from either Seeking Alpha or Morningstar, but all these are just estimations, but they're where I think that this company could go. At number 6, we have VUG, which is the Vanguard Growth ETF at 7.65% of my portfolio. The VUG tracks large cap stocks. So if you have a very large market cap, I think it's the top 180 companies in the US, they're in that ETF. So it gives me just more diversification across those 183 companies. Right now, I'm down 5.4% in the VUG. Number 7, I have Google at 5.79% of my portfolio. Google, just like Microsoft, huge tech company, right? Tech giant. There's no way that Google's not going to be here in 10 years. Everything that you search is on Google. It's not going anywhere. And I want to invest into a company that's not going to go anywhere. I'm a long-term investor, okay? I dabble, but I'm a long-term investor, all right? Number 8. First things first. I'm actually down 13.7% on Google. I think that is my second largest company that I'm down on currently, but I do have a price target of $240. So I think Google is there. With the strides they're making with automated driving and Waymo, their collaboration with Jaguar, I think that's also going to be a huge thing for Google. Number 8, we have Amazon. You've heard of Amazon, 5.74% of my portfolio. Tech retail company. You buy groceries, you buy your clothes, you buy your MacBook on Amazon, but you also get a lot of cloud computing from Amazon. They're kind of everywhere at once. I remember in my life, whenever I would buy like a Game Boy, it would take 10 to 14 days to ship. And then Amazon Prime came out, I don't know how many years ago, and we have 2-day shipping, next day delivery. Where I live, we can have it same day by like 5 p.m. That's insane. Whatever they're doing, they're gonna, as long as Jeff Bezos is running that company, the innovation through the roof, you can't tell me it's not gonna be here in 10 years. All right, and number 9, my last stock that I own in my portfolio is Tesla at 2.26% of my portfolio. I love Tesla, okay? I drive a Tesla Model 3 Performance, a 2024. I love it so much. Before this Tesla, I had a 2023 Tesla Model 3. I love it so much. Now, the actual stock itself, extremely volatile. It's painful. It makes me want to pull my hair out. However, never count Elon Musk out. Tesla's PE ratio was kind of through the roof the last couple months. And I think they're down 40% from all-time highs, if I'm not mistaken. They went through kind of a insane correction the last 2 months or so. But yeah, only 2.26% of my portfolio, my smallest position. I don't know how I feel about it. It's been crashing, and currently it's at that fair value mark. My fair value is 250 according to Morningstar. That's where I price it out as well. And Tesla's at 249.50 right now. It's definitely, Tesla's difficult because Elon is so controversial, Tesla's so controversial, but I think as long as Elon is on the face of the earth, whatever that man's thinking, whatever that man's innovating, it's gonna do numbers. It's gonna make money. And so I'm never gonna count Elon Musk out, but I am down 27% on my Tesla holdings. But like I said, at one point in my portfolio, my entire portfolio was up about 10.5%. I was sitting good, feeling good. And now I'm down 22% because of this tariff war and market uncertainty. And this is just the things that you have to go through, right? Everyone is going to be going through a position of lack at times in the market, if you're a long-term investor and you look at the chart, you look at Nvidia. Nvidia the last 3 years has been insane. It's literally just, actually, let me do this so that way you can see it. Boom. That's literally Nvidia. And if you look at it and you're like, oh man, like there's a couple of these dips here and there. Yeah, those dips are like 20% dips. But you look at the chart and it's ooh, all the way up. And so my thing is this, is you cannot let your current fear dictate your future investment. A lot of people, they look at what's happening in the market. They look at interest rates rising, that they can't buy a house. They look at whatever it is in the economy, whether that's consumer spending, consumer income, getting the unemployment rate, whatever these numbers are that people look at in finance, and they get scared for the economy. These people, you think this is the first time America has kind of like had a market correction? I think this is the first time America has gone through a tariff war. I think this is the first time that any of this stuff has happened. No, this has been happening for hundreds of years, since the inception of America. Investing is not something that's all happy in rainbows. Investing makes money to those who are in the market for the long run. If you're day trading, if you're doing certain things that are without the proper analysis and without the proper convictions, it's gonna be much, much harder for you to stomach the 20% losses. When you are in the market for the long run, you can look over the next 5-10 years and you can realize, hey, these losses, they don't matter as much because I'm in here for the next 5, 10, 15, 20 years. And I promise you, if you sit on high conviction, high value, not like random like penny stocks that like don't have realized value yet, but companies that have value and have forward growth and have good business models you have high convictions for, buy it and keep buying it for the rest of your life. And I promise you, you're going to be in Malibu with your kids. They're going to be calling you a DILF. It's going to be super awesome. Everyone's dream life, right? So what I'm trying to say is I'm not going to sit here and I'm not going to tell you that I'm here swimming with millions of dollars. That's obviously not the case. I am down on every single one of my stocks, but I am a long-term investor. Does it suck that I'm going through this right now with you guys? Yes, I want to be going through 23 right now, where everything's going straight up. I think the market returned 23% that year. Insane. That's where I want to be, but you don't get to choose where you are. You get to choose how you act where you are. So in the market, if you're invested, stop selling and buying and selling and buying. Stick to one thing. You will never make money fast. There are very few people that get rich quick. I promise you, majority of people that are wealthy, it happened over a series of time, series of failures, series of losing money. But you have to have high conviction, have high hopes and discipline for what you invest in. That is how you will gain wealth. Not only will you make money in that process, but you're gonna teach yourself discipline and business tactics, financial literacy that you can apply not only to stock trading and investing, but also to your own business, whatever, multiple businesses, wherever you are planted at, in your relationships, in your family. These things are not only usable and valid for the market, but also for all life situations. Investing is not physics. There's not a formula, there's not an equation that will just make you money. Investing is psychology. When people are fearful, be greedy. When people are greedy, be fearful. Everything is based off of how people feel. If people feel safe in America and they feel like everything is steady, the markets will be green. If people feel scared, the markets will be red, no matter how good the company is. So here's my advice. Here's what I am doing. Now, keep in mind, I'm not a financial advisor, so don't take my advice. But here's what I'm doing, and if you want to follow that on your own will, go for it. When people are scared, like they are right now, the consumer index is very fearful. If you don't know what that is, Google it, okay? I'm invested in Google, so I'm a part owner of Google, okay? Look at what the consumer index is, and it's fearful. Buy high value, high conviction companies when people are fearful. And when people become steady, the price will eventually go up. It's not rocket science, it's just hard. It's not complicated, you just have to do it. Nothing I'm saying here is like revolutionary. It's just hard. The reason why people pull their money out of investing, the reason why people sell their stocks or sell their properties that they have is not because they think okay, you know what, like the market's going through a downturn right now, and I just think that like I should sell it and whatever. No, what happens is they come home to their wife and kids and they're sitting down and you have that pit in your stomach thinking, I don't know if I can feed my family next week. That's what makes you sell your stocks. It's psychology, not physics. Everything's about how you think. If you learn how to think correctly, you will succeed. There's this book that I've read by Morgan Housel, The Psychology of Money. Amazing book. I've referenced it on several of my videos. Give the book a read. You will learn so much. You will feel confident in investing. But with all that being said, I share with you guys my portfolio, my top 9 stocks, exactly where I'm standing with them. I want to be honest with you guys. I'm down right now, but I'm still investing because I know wealth is built, not just given immediately. So don't be discouraged. Keep investing. Keep learning. Share with me some of your biggest wins, some of your biggest losses in the comments down below. If you have any questions, comments, concerns, any stocks that you think that I should buy, that you should buy, leave them down below or DM me on Instagram at Ruben Uzun. I'm active on Threads as well. But if you guys enjoyed this video and you found high value from this video, I put a lot of effort into these, would you consider liking the video down below and subscribing to the channel? I would truly appreciate it. But with all that being said, thank you for watching, and I'll see you next time.